What is up everybody, Gifford here and welcome to another video. Today I want to talk about why my Sharesies account is going to hit $100,000 and why I'm pretty confident that that is going to hit in the near future. So we're into my Sharesies account and you can see there it is currently at $89,000 and I really think I can get close to hitting this at $100,000. Obviously if there's a market crash that's going to be a different story, but we can see here that I'm only $11,000 away from it. And in order for me to hit that $100,000 mark, then I'm going to need to have an overall increase of about 10 to 15% in there. So in my KiwiSaver, if it's 10%, that's going to add another $6,000 from where this price is, and also another $6,000, another 10% return on this thing here. But do understand that I also have some dip money and the current money in my wallet, and that I am also investing $100 a week into this account. So if we go into why I am very confident that this will hit 100k, is if we go to view chart, we can see here in the last year, apart from that little sell-off there, which I'll explain in a minute, the chart does go up. So if I am constantly investing in the stock market, we are eventually going to hit that, right? It might not be this year in 2025, it could be 2026 or 2027, but as long as I keep an investing mentality and not try to gamble too much on individual stocks in this portfolio, more like ETFs, then 100% I am going to get there easy. And just before I show you what's in my current portfolio, what we have here is my recent sales, and the reason why I have sold these is because I was invested in a lot of ETFs, and a lot of them, or probably 80 to 70% of them, was not actually beating VOO or the S&P 500. So I decided to let them go, because one thing is I don't actually have time to look into those individual stocks or those ETFs and track them. I want to consolidate it and bring it a little bit lower, make it a little bit easier, because I want to put my time into not actually managing my Sharesies portfolio, although it was pretty minimal anyway. I just want to consolidate it a little bit more and put some time into options trading, and also just working my second job in general. So we can see here I sold out of Lowe's, iShares Core Dividend Growth, Wisdom Tree, I sold out of that one, and I sold out of VT because I have VT in my Invest Now account. We also got some sell-offs from McDonald's and Realty Income. So a lot of things that I've been showing on my Instagram, if you follow me over there, I have been showing you when I've sold those. So going into my portfolio, clicking investments, and then moving down here, we'll start with ETFs. We can see I've got 7 ETFs now. I used to have more, but yeah, if we just changed it to the highest returns, we can see here that VOO was actually the best performing one. Apart from that one, I've owned these other ones at the exact same time, and it beats all of the other ETFs as well. So that's the reason why I sold. I am going to be putting a lot more money into this one here, because I do fear there might be a stock market crash. So this gives me a lot of protection in the long run, because I'm happy to put money here, because if it does crash, then I know it's going to go up eventually. And if we head over to my companies, I have sold off some companies as well, but I've also added some high growth ones, or I feel that are high growth ones here. So just showing you my investing, you should buy stocks that you feel or you think is of value. But for me, I think that we're going to have some decent growth in Celsius at some stage. So, it's not a large amount. I got to weight these in my portfolio. I can't go all in to like my options trading, because that's much more risky. But in this one, I try to sort of keep a mix of 80 to 20%, 80% ETFs and 20% sort of individual companies. But here we have going pretty well Celsius. A new one is Soundhound that I've added as well. That's nicely up at 7%. And I've added ASML. So just a small position as I, want to put more money in. But a big one to me is that Google stock. Now, I've put too much money in this already, but I feel it's just a very good stock to own right now. The price has been absolutely hammered, and I think it is undervalued. But anyway, I will try to buy a little bit more of that, even though it's overcapped, because I feel like it is good value. But see these ones here, these are very risky, so they could go up to negative 30%, 40% pretty quickly. But this is what I want to expose the portfolio for, because where there's high risks of losing money, there's also high gaining money as well. But just note that you do have to make sure it's in proportion to your overall portfolio, so that if there is a downturn, you don't get absolutely crushed. So what we're looking here is the returns of the S&P 500 in the last 20 years, I think. And there is just my scribbles on what the returns are. So let's have a look. So I think in the current year, this is 2.9 whenever I took it. And then the last year, we had 23%, 24%. Pretty massive when you consider the S&P 500 gives over the last decade, actually not decade, century, is about 7 to 10% is what people quote it. So these last couple of years, or these last 6 years, have been pretty damn good. You can see here that we had 28%, 16%, and 26% returns. Imagine if you were investing $100 a week and you were getting these returns overall. So pretty damn good. Now, we have had sort of down years. So one year is minus 19% and here only 6%. But yeah, and in 2000, we only had this minus 0.7% and the rest have been pretty green. Now, back in 2008, when they had that massive crash, it was a minus 38%. Just showing you that minus 38% and these other negatives, by far, it has been pretty positive over, the last 10-20 years. And in my portfolio, I've done a little bit of changing up. So this just tells you the difference between growth stocks and value stocks, although I have been primarily investing a lot of it, or all of it, I say, in dividend stocks. I've now switched over to, I've been finding some growth stocks that I'm adding in there, which is a little bit more risky. I have sort of increase my appetite there, but I'm wanting a few more returns because I am bullish in the market in the next 10 years. And this is just a good slide to remind you that if you are a long-term investor and you find a good company, that sort of $40 investment can turn into a massive, gains later on in there. And we can see that if you are interested in dividend stocks, that the dividends that you get will, is compounded if you hold it for a long time. Unfortunately, I haven't been investing that long, and nor do I like dividend stocks, but this is just an example for you to have a look at if you are a long-term investor and this is the kind of investing that you're wanting to do, and you are trying to find these companies that can have long-term growth for you. So why do I think my portfolio is going to hit $100,000? And that's because I am actively tracking what I do in my portfolio now. I'm more serious this year. Now, just because I track it doesn't mean it's just magically going to go up, or I'm just going to get these awesome gains from it. I could be losing money, and I could be just tracking money that I'm losing. But the number one thing here is that I am tracking and understanding where my portfolio is. So just because I put lots of time into this doesn't actually going to guarantee me that I'm a better investor or gains. It's just me understanding that where my portfolio is at and what I need to do if I'm losing money, or or they will have a market crash and I don't think it's very good. Well, obviously, if the stocks go down and there's stocks that I like, I'm going to be continuing to buy more of it, because eventually when the market does go up, or if it ever does, then I'm going to get those gains in the future if I invest in good companies. Or in this case, usually when I have a bit of fear in the market and it is going down, I'd rather buy ETFs unless there is some stocks that I have very high conviction in. So this is my tracker here that I have for the year. You can see here I do have targets of what I want the portfolio to be, and this is just targets, okay? This is what I'm aiming for. I might hit or miss it. This is a good way for me to plan what I'd like to do. And obviously we can see here that in this portfolio, what I'm counting the dividends, options, and private, although that's changed now. But in total, I started with $60,000 amongst all these, and I'm hoping that by the end of the year, I can get to $70,000 here across those ones. But this is across multi-portfolios. What I'm focused on is that my Sharesies account, which also has my KiwiSaver in it, will also gain 10%, or, I think it's like roughly 13% is the gains that I need for it to hit $100,000 this year, or maybe I can hit it the year after. Don't know. We'll just see what the market does, but I will just keep on investing into this account. And over here on this graph, this is just to say that actually in my Sharesies portfolio, which is I've got to rename that too because it's dividends there, but it is Sharesies here, that I'm adding 5K into that, or sort of every 12 and a bit weeks, $1,250. And just a heads up, my options portfolio is much higher than that. It's definitely going to hit here because I did put some cash in there to run a new position on that, but I've got a video on that if you're interested. So one of the things that is going to affect the market returns for 2025 is obviously the presidential election. We have President Trump, and then you've also got Elon Musk in there doing things, pulling some strings. I have no opinion on politics. Politics absolutely bore me, but it does affect the stock market. But over here is an interesting image of the different stock returns that we've had from the different presidents throughout there, because I'm heavily invested in the US stock market. So if that is to crash, then a lot of the value of my stocks is going to absolutely get hammered. So a lot of my wealth is in there. So it's something that I do need to look closely at. But what we can see from this chart is that in general, when a new president does get in, the stock market does tend to do pretty well in the first 6 months, and then carry that through into the next, into the year. It's only an indication. We don't know what's going to happen. World War III could break out and then we have a massive crash, that type of thing. But this is just kind of the information we can get to kind of move us into the right direction. So this is just the information that we can gather to sort of plan our way into the future, but remembering that whatever happens, then we can always make decisions later on and change things up. And I can tell you that if there is a massive crash, I would recommend to everyone to work a lot harder, try to gain a lot more income to be able to invest into the stock market, because eventually it will go back up again. And this here is just a news article of what people perceive the returns will be in the stock market. They're saying that, hey, we are going to have a bullish year, so for 2025, but it's not going to be a massive year compared to the previous, obviously, because we've had 20+% returns in the last 2 years, and that is pretty huge, right? So if we get a positive this year, I'm going to be pretty happy with that, but obviously I am aiming for that 10% mark. That would be awesome for my portfolio, and that would get me to my target of $100,000 in my Sharesies account, because my KiwiSaver would go up along with my investments. So what will the market do? Overall, no one knows, and I definitely don't know. All I'm doing is planning ahead of how I can reach my target goals that I've set. And if good things happen, well, that's fantastic. I've set myself up because I'm investing in the market. If bad things happen, well, then I have to change some things up, but I'm definitely going to be working more, saving more, so I can invest more money into there. And remembering that we can only react and make decisions based on what we have learned. And I have lost a decent amount of money in the market, so I think I have acquired a little bit more knowledge than I have before, because losing money does suck a lot. And what I've learned is that during bad times, you want to buy good companies with revenue and earnings growth at a fair price, or buy the stock market and just dollar cost average. So something like VT, and don't worry about the crashes and the gains, just keep buying it weekly, because if you believe in the stock market overall going up from those charts that I showed you before, then you're going to be just fine either way. And regardless of what the stock market does, here is a secret why I will eventually hit that $100,000 mark. And that is because 1, I track all my expenses. 2, I save as much money as possible to then invest. 3, I live below my means, which is that I have more income than my expenses. Also, number 4, I have no personal debt whatsoever. 5 is a big one, and that happened to me last year, which is I am mortgage free, so I don't have to pay any mortgage or have to pay rent at all. I do have some expenses, you have living expenses like rates and obviously food and that kind of stuff, but that is better than paying those ones there. Number 6, I keep investing weekly, so into my Sharesies account, I invest at least $100. In my other accounts, I invest even more. As you can see that if you watch another one of my videos, I just put $8,000 into my Interactive Brokers account. And number 7, the stock market goes up and down in cycles, so eventually while there's bad, you're gonna get some good in it. And if you've been following my channel, you do see that I do get some wins every other time. I'm no expert because I've definitely lost money, but you can see that overall my stock market portfolio goes up from my savings and the gains that I've had. And number 8, buying more stock at a lower price to gain when they go up. So the same point as number 7, if it goes down, you buy more. And if you want to be low risk, you just buy the total stock market, which is VT. If you want a bit of risk in there and just concentrate it into America, and that is the Smart Shares ticker symbol USF. So in summary, that is why I'm confident that my Sharesies portfolio will hit $100,000 very soon. If you have any questions, feel free to pop them down below and I'll do my best to answer them when I have time. Feel free to use my referral codes to help me out in this channel. Also, if you're interested in what I've got to say during the week, or you just want to hear more from me, feel free to go over to Instagram. I post there stock market news, what I'm doing, the trades I'm doing, and what I'm thinking in general. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Please hit like and subscribe if you're into content from someone investing from New Zealand, and click this end video here to know more about KiwiSaver, which will save you thousands in the long run. Thank you and goodbye.